Hello, and welcome to part 6 of our series on understanding binary options. This particular video deals with the concepts of support and resistance, concepts which are not particularly limited to binary option trading, and rather are more well known in the concept of stock trading period. However, these concepts do have a lot to do with the binary option trading strategies that we've discussed earlier on, specifically strategy 2. And therefore we're gonna do a short video regarding these concepts. So let's start as we normally do with a brief overview of binary option trading. How does it work? Essentially, we pick a commodity or a stock or index, and for the purposes of this video, I'm just going to refer to this as a stock without loss of generality. And each of these has a current value, a value right now at any given point in time before we're ready to make our trade. Binary option trading relies on our ability to predict what that value is going to be sometime in the future. We call if we think that value in the future is going to be greater than what it is now, and we put if we think the value is going to be less in the future than what it is now. And being right means we get a percentage of the money that we invested, and being wrong means we lose all of what we invested. So previously, I think in part 2 of our series, we discussed a strategy which I had earlier referred to as the Outlast strategy, I believe. However, certain people have very kindly pointed out that this is also known as the martingale strategy, or one of its variations, and I thought it was important to call that out. So let's just briefly review the strategy. Essentially, we stop thinking of each investment or trade that we make as random. Rather, we try and think of each trade as related to the other trade that we may make. And essentially, we base this strategy on the principle that no stock or index can rise or fall indefinitely. And if we pick a direction and we stick with it, eventually we should be correct, regardless of whether that direction is put or call. And even if we make a bad trade to begin with, we can leverage that information to make a subsequently good trade. And how do we end up winning? Essentially, whenever we're correct, we try and offset the losses we made when we were wrong. So let's say we made a number of incorrect trades and we lost X dollars. As long as we're correct at some point in time, all we have to do is whenever we're correct, we make a profit of an amount that's greater than X dollars, greater than the amount that we've lost so far. And therefore, the profit that we make in the time when we're correct, we can offset the losses that we've made when we're incorrect. And overall, we can make a profit. And this is discussed in detail in part 2 of our video series. And again, for the record, this is also known as the martingale strategy, or one of its variations. So let's move on to the concepts of support and resistance, which are particularly pertinent to this video. Essentially, these concepts they reside in the basis of the perception that regardless of which stock or commodity or index we pick, a certain degree of fluctuation in the value of that stock or index is normal. It's perfectly normal, and we've discussed this in our videos earlier. In fact, a certain degree of fluctuation is necessary for the whole market to function because of various factors such as liquidity, etc., which we're not going to get into because it doesn't directly relate to this video. But suffice it to say that if the value doesn't stay static, that is normal. Support and resistance levels try and establish bounds on what fluctuation can be considered normal. For example, if the value fluctuates by a certain percentage or a certain threshold, that's normal. However, if it goes beyond these thresholds, something strange is going on. And of course, we can fluctuate both up and down, up in the sense that the value can rise, and down in the sense that the value can fall. And therefore, we have two different bounds on the fluctuation. And these are known as the support and resistance levels. So to be more specific, support is the price level or value that a stock is supposed to bounce off of or fall through, such that if the value of that stock falls below the support level, we can imagine that something strange has happened, something wrong has happened, because normally the degree of fluctuation that involves fall, the value of that particular stock or commodity shouldn't fall below the support level. In other words, the support level represents a pseudo minimum, so to speak. I use the word pseudo here because there's of course no guarantee that the value cannot fall below the support level. And notice that in the definition I have the term value in brackets, and the reason for that is that the support level isn't always represented by a number, rather it's represented by a trend line, and this will be even clearer on the next slide. However, now that we've discussed support, by the same token, resistance represents that price level that a stock is supposed to bounce off of when on the rise, such that if the rise of a particular commodity is within less than the resistance level, then that's normal. However, if it goes past the resistance level, we can think something strange is going on. In other words, the resistance level represents a pseudo maximum. A graph helps explain this better. So in this particular scenario, we've taken a commodity, and we don't know which commodity it is. It's a perfectly innocent looking graph. But the information we're supposed to take away from this is that we see that the value of that graph over time keeps rising and falling. And we see two lines in particular. The green line at the bottom that represents the support level, and every time the fluctuation in the value is above that support level, that's normal. It's only in that small phase towards the middle that the value drops below the support level that we can think something strange is going on, something abnormal is going on. This is not normal fluctuation. We also see a red line towards the top, which represents the resistance level. And every time we see an increase, but that increase is below the resistance level, we can consider that to be normal fluctuation. However, every time we cross that resistance level, and that seems to be only in one case, which is towards the left side, about 40% of the graph starting from the left-hand side, we cross that resistance level. That's when something strange is going on. For the most part, otherwise, we always have the value of that particular stock or commodity in between the resistance and support levels. So having explained the resistance and support, how does that help us with binary option trading? Essentially, we combine the martingale or outlast strategy with these concepts, and we try and identify support and resistance levels for the stock or commodity that we're interested in investing in, and we continue with this strategy until the support or resistance level is breached. The understanding being that we don't expect the support or resistance levels to be breached. So let's say we start with a particular commodity at X, and we see that the value is going down. And even if the value continues to go down for a while, and we sort of estimate that the future value is going to be up, as long as we continue this downward trend while the value is above the support level, we'll be alright. Because as soon as we reach the support level, we expect the value to start rising. Because under normal circumstances, the fluctuation should always be between the support and resistance. And by the same token, if we went in the opposite direction, we never expect the value to cross the resistance level. So let's say we make a number of losses early on, and finally we keep thinking the value is going to fall, but the value keeps on rising. However, when the value reaches the resistance level, we say now the value is definitely going to fall. And we turn out to be right, because the fluctuation that has taken the value up so far is now over with, and now the value is going to start to fall. That's how we make money in this case. One of the important caveats to be aware of in this case, and this I think is also pointed out in the video corresponding to strategy 2, is that we need to make sure that we have enough cash to sustain ourselves across investments until these support and resistance levels are reached with respect to the values that we're betting on. So having discussed this strategy, the obvious question that pops us is, how are we going to identify what the appropriate support and resistance levels are? And I'm sorry to say, at this point in time, there's no clear answer. The main objective of the video was to introduce you to the concepts of support and resistance, but not necessarily to definitively answer this question. And I must admit, a large part of the answer is because I'm not qualified to answer this question. I'm just an amateur investor or an amateur participant in binary option trading, just like I believe a lot of you are. So rather than mislead you with a bunch of bogus strategies, I think it's important to just come out and admit that I don't have a definitive answer to this question. However, that being said, the way it works is that people generally use historical data. Essentially, after looking at data for a particular stock or index over the past week or weeks or even months, one can establish what fluctuation is considered normal and what's abnormal. And just like that, after familiarizing oneself with a particular stock or commodity for a reasonable amount of time, one develops an intuition. And normally I wouldn't bring this point up. I don't really believe in intuitions. However, I think it's important to point this out. Why? Because binary option trading is not a science. If it were a science and if there was a simple formula that we could follow, then everyone would do it and everyone would make money off of it. Some of it does have to do with intuition. However, that being said, the intuition does come after a significant amount of research and analysis of historical data. So when I use the word intuition here, I really mean patience, and I mean analysis, and I mean spending time analyzing something before we actually decide to go ahead and put our money into it. A number of websites do offer charts that show the current support and resistance levels in live time for any particular stock or commodity in question. I'm not going to name any particular sites here because before I do so, I want to make sure that those sites are trustable and are of reasonable repute. We want to make sure that the data they're showing is fresh and relevant. So I'm going to take some time and do some research here. And hopefully, having done that research, I hope to be able to come back and update this video or produce a subsequent video on the information that I think is reliable, at least in my opinion. But suffice it to say for right now, if one Googled or Binged or a search engine of your choice the term support and resistance, one could find a number of sites which produce this information. So this seems to be overall a reasonable strategy, and support and resistance are two very well-known concepts. And the reason I put a certain degree of stock, no pun intended, but the reason I put a certain degree of stock into these concepts is because they have nothing to do with binary option trading in particular. They're fairly general concepts with stock trading in general. However, it's important to understand that, and this sounds a little cliche, but just like all the other strategies, even if we did find out what the appropriate support and resistance levels are, there's no guarantee that the strategy is going to produce profits for us. The levels can always be breached. If you remember, we used the term pseudo earlier. So just because there's a resistance, it represents a pseudo maximum. It doesn't mean that the value of a particular stock or commodity is not going to cross that resistance. It's not going to rise beyond that resistance. It just means that normally we don't expect it to do so. And by the same token, just because we've identified the appropriate support level, it doesn't mean that we're guaranteed that the value of a stock or index is not going to fall through that support level. It just means that under normal conditions we don't expect it to do so. So that concludes this video. Essentially it represents a second part, or rather I would say more detail to a strategy which we discussed earlier, which we had referred to earlier as the outlast strategy, but as people have pointed out, it's more well known as the martingale strategy. So I think that wraps it up for about now. Again, I hope this video was helpful to you. If it was, or even if it wasn't, please feel free to leave comments and let me know if there's any particular information that you think I should add or create new videos for. And I think with that I'll conclude. Thank you very much, and good luck trading.